And now we move to our on to our next panelist, honored panelist, Mr. Sandeep Jain, President, Bombay Metal Exchange, and Managing Director, Laurel Wires. With his vast experience in non-ferrous metals, he will be taking us through some numbers, giving an insight on metal markets, prices, trends. In my special request, he also will be sharing some data on minor metals. Over to you, Mr. Jain.
Thank you, Binaji. Am I audible?
Yes, you are.
Yes, sir.
Okay, so namaskar and good morning, everyone. It is honored to be a part of this webinar initiated by Metal Trends in association with the Metal X.
इसके बाद
So
भी होगा।
today's keynote speaker, Shri G. Chandrasekhar, Shri Pugajanti, Executive Director, ILZDA, Shri Jitendra Shah, President Farm, Ms. Beena Verma, former publisher and editor, MMR, and other guests. Okay, my presentation is there. Okay, so today I'll be presenting an overview of India's non-ferrous metals market. We will delve into the demand, supply, and trends for key metals such as copper, aluminum, nickel, tin, and minor metals. So the overview is, let's begin with a brief overview of the market. The Indian non-ferrous metal market is experiencing significant growth driven by various factors, including infrastructure projects, renewable energy needs, and the rise of electric vehicles and electronics. Next slide, please. So I will just talk on the price performance. So LME copper prices increased by nearly 2.4% in 2024 and are up 8% so far in 2025. During 2024, tight global mine supply, stronger demand from the green energy sector, the closure of Cobre Panama mine, and new US and UK sanctions on Russian metals supported prices. However, weak economic conditions in China kept the gains. In 2025, prices saw a sharp jump, which was at odds with the stronger US dollar, disappointing Chinese PMI data at the start of the year, rising visible metal stocks, slowing green energy investments in the US, and a drop in global EV sales in January. So the spike is in copper prices was driven by speculation about potential US tariff. So copper inventories are plentiful. Total visible stocks of the metal are up 132 KT this year so far. Seen differently, copper's total reported stocks are 262 KT above those on the same date last year. So, thirdly, world's second largest producer country, Peru's copper production in 2024 fell 0.7% to 2.74 billion metric tons, marking its first decline after 4 years of post-pandemic recovery. However, December output rose 2.9% year over year to over 262,000 tons. The drop is attributed to declining ore quality and a lack of new projects, with production expected to remain around 2.8 million tons in 2025. Next slide. World's second largest producer company, BHP, predicts global copper demand will surge 70% by 2050, with India's demand growing fivefold in 25 years, driven by population growth, AI, data centers, and decarbonization. Chief Commercial Officer Ragnar highlighted India's strong GDP growth and budget as a key opportunities. Citibank now forecast copper to average $8,500 per metric ton over the next 6 to 12 months, down from its earlier projection of $9,000. Global mine production saw a 3.7% year-on-year increase, reaching 1.97 million tons. This growth was driven by recovery in Chile and Indonesia, plus new output from projects in the DRC, Botswana, Mongolia, and Serbia. However, this was partly offset by declines in Canada, Panama, Peru, and the US. International Copper Study Group, the global refined copper market recorded a deficit of 131,000 metric tons in November, up from 30,000 metric tons deficit in October. So from January to November 2024, the market reported a surplus of 168,000 metric tons. This is in contrast to a deficit of 89,000 metric tons during the same period in 2023. In November, global refined copper production reached 2.34 million metric tons, while consumption totaled 2.47 million metric tons. So copper's another factor, the copper's CME LME gap is to $800, down from the high of $1140 last week. The hope of a tariff on copper imported into US lifted CME prices this year. Next slide. Chinese banks issued a record CNY 5.13 trillion in new yuan loans last week, that is 14th Feb, far exceeding December CNY 990 billion and forecast of CNY 800 billion. This surpasses the previous high of CNY 4.92 trillion in January 2024, driven by the policy measures to boost credit. Banks also prioritize early year loan distribution to attract top customers and gain market share. So copper has room to fall to say dollar 9200, 9250, but it needs more negative triggers. Example, dollar strength, inventory inflows. So there is a disclaimer definitely on this also. I'm just guessing. Then MCX copper support is 863 to 847, and the resistance is likely to be 892 and 912. So this was for copper. I'll move on to aluminum, slide 5. Can I have aluminum slide? Yeah, okay. So, aluminum price outlook for the rest of 2025 to be determined by sanctions on Russian metals. China's dominance in primary aluminum production, trade tariffs, Europe's energy crisis, and the economic slowdown, all reshaping supply chains in ways that could lead to unpredictable price swings. Trump's aluminum tariffs may boost prices in short term, but risk a global trade war, pressurizing long term demand. Economic risk is slower US growth, and China's struggle could weaken metal demand, but potential stimulus may cushion the impact. So talking about demand concerns, so while demand for aluminum in EVs, packaging, and renewable energy is rising and remains a prospect for aluminum demand, the capital-intensive nature of smelting means that many firms remain hesitant to invest aggressively. Overall, prices could rise in short-term perspective of 3 to 4 weeks. Demand slowdown concerns could prices subdued in medium to long-term perspective of say 3 to 6 months. Aluminum has almost stagnated at $2600 to 2650 and is supported in the short term by nearby backwardation. Cash March traded at $16 bill, and the metal needs to give respect to normalized SHFE alumina prices. Prices may begin to fall by later this week, but gain momentum in the next month as tight periods expire and inventories rise in LME warehouses. So, talking about Indian market, I would like to mention that Hindalco Industries, one of the India's top aluminum and copper producers posted a strong than expected quarter 3 profit driven by higher aluminum prices. The Aditya Birla Group owned firms saw net profit jump 60.2% to 37.35 billion for the quarter ending December 31, beating 35.73 billion forecast by analysts. So, strong aluminum prices in India helped offset weaker margins at its US unit, Novelis, and benchmark aluminum and copper prices on LME rose 17 and 13% year over year, boosting metal selling prices and profits. So, meanwhile, aluminum prices have mostly been range bound or even falling due to potential risk of global trade war following US President Donald Trump's 25% tariff on steel and aluminum imports. So, additionally, tightening cash 3 month spread in metals indicate likely deliveries of metal inventories into LME warehouse in the coming week, which could dampen price further. So the price gap between LME and SHFE aluminum has been widening, reaching $160.92 per ton in early 2025. This growing difference is driven by factors such as exchange rate and tariffs, making the arbitrage market more volatile. So MCX aluminum support could be seen at 255 to 246, and the resistance is 272 to 283. So zinc has been already covered. So we'll move on to the next metal, which is nickel. Slide number 7, please. Nickel key statistics and trends. Okay. So move on to nickel. All right, yeah.
Nickel.
So yeah, nickel demand, global nickel demand is estimated at 3.5 million metric tons, driven by the stainless steel and electric vehicles, battery industries. So growth rate can be seen is at a compound annual growth rate CAGR of 7 to 8%, primarily fueled by the expansion of the EV sector. So the primary consumer, the stainless steel industry, remain the largest consumer, accounting for 70% of the demand, while the battery sector is the fastest growing segment, driven by the rise in lithium-ion battery production. India's nickel imports, India continues to import around 95% of its nickel requirement, with major suppliers including Indonesia, the Philippines, and Russia. Indonesia is in particular dominates global nickel supply due to its extensive mining and processing capabilities. So next slide on tin, slide number 8, please. Yeah, okay. So tin demand, global tin demand is estimated at 400,000 metric tons, with steady growth driven by its critical role in the electronics and chemicals industry. So the growth rate demand is growing at a compound annual growth rate CAGR of 5 to 6%, supported by the expansion of the electronics sector, particularly in semiconductors and soldering applications. So primary consumers, the electronic industry remains the largest consumer, accounting for 50% of global tin usage, following the chemicals industry for applications like PVC stabilizer and tin plating. So India's tin imports, India continues to import 100% of its tin requirement, with major supplies being China, Indonesia, and Myanmar. China remains the dominant global supplier, while Myanmar faces challenges related to ethical sourcing and supply chain transparency. Okay, so next slide is on minor metals. So the market view for minor metals is that the global market for minor metals, including manganese, magnesium, cadmium, and cobalt, experiencing steady growth, driven by their critical roles in advanced technologies, renewable energy, and industrial applications. So the cobalt demand is surging due to its use in lithium-ion batteries for electric vehicles and energy storage systems. Manganese, essential for steel production and emerging as a key component in EV batteries. Magnesium, which is widely used in lightweight alloys for the automotive and aerospace industry. Then cadmium, primarily used in nickel cadmium batteries and solar panels, though its use is declining due to environmental concerns. And the challenges faced are the minor metals market faces supply chain risk disruptions, geopolitical risk, and sustainability concerns, particularly around mining practices and environmental impact. Sustainable growth strategies be increase focus on recycling and circular economy practices to reduce dependency on primary mining, emphasize on domestic exploration and diversification of supply sources to mitigate geopolitical risk, adoption of ethical sourcing standards to address environmental and social concerns. So now we're talking about the key challenges and growth opportunities for India. India's non-ferrous metals market faces challenges such as import dependency, infrastructure bottlenecks, and high energy cost. However, there are significant growth opportunities in domestic mining, recycling, and the push for electric vehicles and renewable energy. I would also like to mention that due to implementation of Bureau of Indian Standards QCO on copper cathodes and aluminum products, there are chances of shortage in supply, especially specifically when we talk about copper, because the international players, I mean the exporters, have not taken BI certification, and it is taking little time. So, well, from Bombay Metal Exchange, we have represented. So, if something can done, or maybe I think the shift for QCO for another, say, 3 4 months or so, but it's already implemented from 1st December 2024. So, the conclusion remains that India's non-ferrous metals market is poised for strong growth, driven by infrastructure, electric vehicles, and electronics manufacturing, while challenges persist. Government initiative and recycling efforts offer significant opportunities. By 2025, India will remain a key player in the global non-ferrous metals market. So, thank you very much. Thanks for the attention. And I've tried using less Trump word.
Yeah, if you don't mind, let me say I want to compliment Sandeep for this excellent presentation. You've given Sandeep an helicopter view of the base industrial metals market. Very, very important. I'm intervening before Veena takes over. I just want to add a couple of more points. Your presentation was very interesting, but I wasn't too attentive, therefore I might have missed one or two slides. I just want to share something on copper. Primarily, I think the copper market participants believe that after steel and aluminum, copper will be the next target as far as Trump is concerned, and therefore copper prices have started to rise. And I am convinced the COMEX benchmark copper price will definitely be influenced by Trump's tariff plan, at least in the near term. But I also see a certain demand weakness coming in. Demand growth will be quite weak, and the refined copper supply is going to be quite robust. That's going to weigh on global prices, which is very important. And therefore, and second is energy transition, because Trump is not such a great climate enthusiast or is a great supporter.
Rightly said.
There could potentially be, these are risks. We need to take into account these risks. There could potentially be a slowdown in the energy transition efforts of people. And therefore, I'm seeing now if Trump imposes tariffs on US cotton imports into the US, then obviously COMEX prices will rise. And already the differential between, or the spread between COMEX and LME is, I think, about $1,000 a ton.
Yeah, 800.
I don't track prices on a daily basis,
Yeah.
but I'm sure you will bear me out. उसका आसपास होगा $1,000 या $1,100 का आसपास वो spread चल रहा है. And if demand slowdown actually happens because of China, because of energy transition slowdown, etc., then there is a possibility, in my view, that actually copper prices, which are now slightly moving up, can actually correct in the second half of the year, potentially come to something like $8,500. I'm not giving any price outlook. I'm not giving price forecast, but I think this is the possibility of the market direction. But the situation is still evolving. It is not crystallized. It's evolving. Therefore, it makes, I think, market participants, all the participants there, all the delegates have to constantly update themselves, look for new information, look for updates, so that they'll be able to take a very proper, well-informed trading position. Thank you, Sandeep. Excellent presentation. Over to you, Veena.
Thank you.
Thank you, Mr. Jain, for sharing your expertise with us at such an absorbing presentation, covering most of the non-metals, which we are really happy. And Mr. Chandrasekhar has added further points. And with this, we really thank you for covering the entire minor metals, which always in my past experience after the seminars, the participants used to come to me, Madam, you never cover minor metals. So my special request, you have taken care. And in future, we should have some focus on minor metals as well in detail, Mr.
बिल्कुल बिल्कुल
Chandrasekhar.